What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this is a channel dedicated to my investment journey, along with coverage on Tesla, NEO, Virgin Galactic, and ChargePoint. Come for the information, stay for the random clips. So as much as last week was all about the equity market going out in a blaze over the inflation concerns, this week is all about crypto crashing. So in today's video, we'll start with a quick recap of what happened in crypto this week and my thoughts on where we go from here. Then we'll get into the Virgin Galactic Test flight that took place yesterday and discuss what comes next. And finally, wrap up with the weekly performance review expressed in percentage gain or loss for the portfolio. With that said, let's get into it. All right, so jumping into the crypto crash and what's going on. Well, there are several headlines throughout the week trying to provide an understandable cause for the over 30% drop in the Bitcoin value when it dipped below 30K. And so those headlines varied from Elon tweets to China reaffirming its stance against Bitcoin utilization as a form of payment, profit taking, tax day, the SEC and IRS likely tightening the regulations around taxing crypto. Pick your poison. No matter how you look at it, no one who has actually done their research is or was surprised by these headlines. It really isn't new information. The problem is many jumped onto the crypto bandwagon believing that it only goes up, and that's not the case. The reality is this is a hard reality check for a lot of people, and as always, it's retail investors who lose while institutional investors benefit the most. I've told you before that 2021 is the year of crypto. Many, including myself, are seeing this crash that's ongoing as a massive buying opportunity. Being able to pick up Ethereum, Bitcoin, Cardano, and Doge at an over 50% discount from their all-time high is simply unreal. Again, this is not financial advice, so make sure you do your own research and only buy if you feel comfortable doing so. The other thing to consider is that not a single institutional investor panicked. Why? Because this is part of the plan. Step one is get the weak hands out with FUD, fear, uncertainty, and doubt. Step two, buy in at a major discount for their clients. Step three, establish a stronger base of long-term investors. Step four, push it to a new all-time high, take profit. And step five, repeat the process. Again, this channel is all about simplifying things and seeing them for what they are. Once you understand these basic concepts, the rest is simply noise. So step one and two right now have been completed successfully in this cycle. Most of the selling is being done by retail investors who are getting spooked by the headlines. The rest of us who understand this are patiently waiting and in some cases swooping in and capitalizing. The year-end target for Bitcoin really hasn't changed. We're still looking at 100K. Ethereum is still going to 10K. Doge, we're still looking at $1. And Cardano is still $10 projected by the end of the year. These targets have not changed. So this is exactly why you need to zoom out from the day-to-day, the week-to-week, when looking at your investment, especially in crypto. And to put it into perspective, let me just use Bitcoin as an example. Despite the most recent crash that we're going through right now, Bitcoin is still up approximately 32% year to date. And if we go out a full year, 12 months back, that's 272%, right? And what's even more impressive is that out of the four cryptos that I've listed, Bitcoin has the least amount of returns over the same time period. So what happens next for the crypto space? I think it's simple. We move on to step three, and that's establish a stronger base with long-term investors. And I'll link the article that I'm going to be referencing here, but here are some of the highlights. Daryl Cronk, who's the president of Wells Fargo Investment Institute, said that he believes that the cryptocurrency arena is maturing and it permits it now to be a feasible investable asset. This now makes the third large bank after Morgan Stanley and BNY Mellon to get into the space. Citigroup is also contemplating moving in. The reason is the spike in client interests. So the bottom line here is that the new financial system here and abroad is being built on the likes of Ethereum and Cardano. Bitcoin is widely accepted as a store of value, and that notion is only growing, which makes it digital gold. And Doge is well on its way to become the first true cryptocurrency for transactional use. Personally, unless I see those large players moving away from the space or a major shift in the narrative, it's business as usual. I don't see anything right now that leads me to believe that anything has changed, and therefore the dip will be bought and That's just how we're gonna go. Again, not financial advice. You do you. I'm just telling you what I'm planning to do. The last thing that I will add here for, again, perspective is that each central bank, whether it's China, the US, the UK, or any other major nations, are looking into digitizing their currency, meaning that they do see the benefit of crypto technology. The point here isn't to ban crypto, but rather figure out a way to benefit from it in the near term. So that's why we're hearing more and more discussions around taxing crypto and other things of that nature. And that's, again, in the interim while they establish their own digital currency. So all that to say that, in my opinion, this isn't one of those throw your hands in the air, sell everything, run for the hills moment. This really is just a dip. It's severe. It hurts in the near term. But if you're able to capitalize on it long term, you'll be certainly rewarded. So that's my thoughts on that. And we'll move on. Let's move on to Virgin Galactic. All right, so jumping over to Virgin Galactic, the much anticipated first of 3 remaining test flights to reach commercial state took place yesterday. The goal of this test flight, again, was threefold. One, it was to test a spaceship upgraded horizontal stabilizers and flight controls while validating that the EMI reduction from the recent fixes was effective. Number 2, it was to carry revenue-generating research experiments for NASA. And 3 was to collect data to be used for the final 2 verification reports that are required as part of the spacecraft operator's license. All 3 objectives were met, and we have some great footage that I'll play here in a second of the flight. I'll play it and then I'll come back with my thoughts on where we go from here.
3, 2, 1, release, release, release.
Fire.
Fire.
CJ Mac, we showed test points Alpha and Bravo complete. You're going to space. Again. Increase in pitch.
Wow, look at that view.
Gorgeous.
Okay, trim is set.
Copy. Decrease in pitch.
That was a great burn.
Southeast Tether fully deployed. Point Charlie complete. There's the Sea of Cortez over there.
Baja.
I can see the
Here we
Baja
go.
Peninsula, Dave.
Tester. There's Apogee. Silence of space.
Yeah.
Amazing colors. Resetting entry trim.
Copy.
That's fantastic.
So major congrats to the Virgin Galactic team. That was a flawless flight. And it gives you a good sense of what the experience of actually going out to space with their spaceship is going to be like. I'm excited for it. I think it's going to be amazing and just, yeah, pumped about the future of Virgin Galactic. Let's get back to the video. So the stock price sits currently at $21.22 for a gain of 31.72% this week alone on the back of the news of the test flight taking place. UBS analyst Miles Walton upgraded the stock to a buy with a price target of $36. And now with the successful test flight behind us, this could end up being one of those moments that's a buy the rumor, sell the news, basically meaning that we could see a decline in the stock price as the week gets underway and everybody realizes that we had a successful test flight. Now that's one scenario, but in my opinion, I think it's more likely that momentum builds and we receive some additional analyst upgrades on the back of this flight. So what's my plan as we move forward? Well, I was able to nearly double my share counts under this latest round of sell-offs, and at $21 or less, I will continue to accumulate. If the stock price starts running, I'll simply hold until the next inflation scare and then add on the dip. Don't forget that even after the remaining test flights are completed, there will be a 6 months gap from summertime to early 2022 before commercial flights actually begins, right? So there will be plenty of time and more opportunity to add thanks to the volatility in the market. The last thing that I will add here, and that's around the concerns around competition, namely from Blue Origin and SpaceX, And Blue right now is currently conducting an auction for the first 6 passenger seats for its flight this summer. And the bids are nearing $3 million per seat. That's just ridiculous. As for SpaceX, its first civilian flight is reportedly costing $55 million a seat. The major difference that I see with SpaceX, however, is that you're flying around the Earth, and eventually they will be offering round trips around the moon. So a little bit different, but still a massive, massive difference in price. Virgin Galactic, however, is currently charging somewhere between $200 and $250K per seat. And even if they were to double their price, that would still be significantly cheaper than the rest, right? So the other thing to consider is, and somebody in the comments, feel free to correct me if I'm wrong here, but I believe that they're the only one currently offering a training program that upon completion would make you a certified astronaut when you land back on Earth. This is going to be a major game changer, right? This is certainly not an investment without high risk, but I believe that Virgin Galactic will be successful. And the next 5 to 10 years for the space industry will be exciting. And again, Virgin, in my opinion, is well positioned to capitalize on that new industry. So with that said, let's move on to the weekly performance review and the carnage that's currently ongoing in my portfolio. All right, so welcome to the weekly performance review by percentage gain or loss for the portfolio. And this week, I'll bring it up on the screen here. It's a major sea of red. And we can see here that at one point we were down to 30.05%, recovered a tiny bit, back down to 29.20%, and currently still dropping at 30.69%. And so the major reason why I can sit here, fairly calm and unfazed is because of the high confidence I've built in my investments based on the research that I've done. Now, long term, this may or may not prove accurate, but right now, feel pretty good about where things are at. And again, this is why I've added to most of my positions during this downtrend. Now, this could be one of those scenarios where I think I'm planting seeds and I'm doing awesome, and then it turns out this way. Or it works out long term and I come out on top. I firmly believe that I will come out on top and that everybody who, again, has done their research and is holding strong through this and utilizing it as an opportunity to add and advance will do good or will do well in the long term. All right, so this will be it for today's video. If you enjoyed today's content, as always, remember to hit that like button and share with your friends on social media. And for my newcomers, if this is your first time here, remember to hit that subscribe button and ring the notification bell so that you don't miss out on any future content. As a reminder, I post every Sunday and occasionally during the week. And as always, thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.